Okay, welcome everybody to Wall Street Reporter's next Super Stock, a live stream January 26th. We are back with XTM, paid in Canada, XTMIF over the counter. Marilyn Schaefer, the CEO. Marilyn, welcome back.
Thank you.
Marilyn, so for anybody that's just tuning in, of course, our program, Next Super Stock live stream, is all about featuring those stocks which have that 10x to 100x upside potential, stocks going after massive multi-billion-dollar market opportunities that are at a key inflection point and with multiple catalysts in place to ignite that massive increase in shareholder value. And of course, XTM, I think we're right at that inflection point right now where, all of a sudden things are starting to cook. You have the reopening of restaurants happening, everything is coming back. You're going to the U.S. market. A lot of great things are starting to happen for XTM as we speak.
We sure are. Yes.
So I want to focus today on a couple of things. You had some interesting news you put out this week, which is I don't know if people really understood like the significance of it or like read into it too much, but essentially. One of the things that you said is like 99%. Actually, for anybody that's new, we should actually explain what you do. But the bottom line is that XTM is revolutionizing the $1 trillion restaurant and services industry, with their fintech platform, and we'll kind of get into all the details. But so it's a massive market opportunity, and so I think people have been worried that when they think of restaurants, they think, okay. The world was shut down for 2 weeks. What's going on? And you put out this news saying, what, 99% of your customers are up and running?
Yeah, and which is, that's a really interesting data point. We were doing a bit of blue sky ourselves and looking at our market, and it told us three things. So for those of you who don't know what XTM does, in a nutshell, we provide earned wage and gratuity access to the staff of our restaurants. We provide it in a fully digital kind of environment. So it's a mobile wallet, it's a prepaid, like a debit card, and an.
Oh, Marilyn, I'm sorry, the mic. Hang on, I think your mic went on mute. Okay, you were saying?
Okay, right. So it's with a prepaid. So it's basically what we have is a mobile wallet, an app, and a debit card, debit card that enables you to receive your funds same day with very little operational inflection. So that's our solution in a nutshell. And what we've been able to do is basically sign most of the Canadian restaurant groups to our platform. And that press release was really important because it told us three things. So the fact that most of our restaurants, over 99, I think 0.7% of them, are still going concerns despite the pandemic issues that impacted restaurants. There's three things. First of all, we have the right target. We've been targeting restaurant groups, and these are restaurants that can withstand ups and downs of the industry. They've got enough, depth and breadth to be able to manage that. The second thing is that these, they're operationally focused. So what they've really done is they have really run their business super well, and they have, this is one of their key tools in their whole ecosystem. So we correlate some of their success with our success. And then the third thing is the fact that we when this turns on, our revenue pops exponentially because they're all operational. And so we're really excited about that. So it is a key and critical data point that these restaurants are still going concerns through all the trials and tribulations we've had over the past 2 years.
Because I think a lot of investors, so the story is, for anybody that's new, is, primarily your business up till now has been mostly in Canada. And of course, Canada has been really shut down in the last years, but now you're expanding into the US. So really the big opportunity is starting this year, is in the coming weeks, months. you're going to be rolling into the U.S. market. So I think you mentioned two things which I think are really, really interesting. Your focus, so your customers for the platform are mostly these, kind of larger operators. It's not the mom and pop. It's not like, the diner on the corner. It's really, operators that have, multiple locations. They might be doing, I don't know, can you have a dollar amount? Like what kind of revenues are they doing? You have a metric, it's like 50 million or something?
Yeah, $50-60 million in
So it's a tremendous validation, because these are, look, to run that type of operation, you need, these are sophisticated operators, right? So it's a tremendous validation if they're using your service and they're super, super focused, on their operating margins. And so if they're using XTM, the Today program, this is the name of the thing is called the Today. That's the getting paid the wages and tips today for the employees. So if they're using that, it's a tremendous validation, and especially going forward, I think when you go into the U.S. market, it's a great case study, because you already have this, years of success that you could point to.
That's exactly right. We worked out all the bugs. We worked out all the issues. We went to market with MVP. We have now transitioned to a 2.0 platform, which is super sophisticated, cloud-based. We've added value features like rewards and cashback rewards, and a number of other things that add value to the user. So we are now ready to go into this market, this US market, which is, Canada times 10, and really feel like we're in a good position to be able to dominate.
Okay. And by the way, we're going to get into audience questions. We have some good questions coming in, which we're gonna get into in a few minutes. But okay, so the number I mentioned before is the 1 trillion. That's really the U.S. I use the U.S. number, so I don't know. I guess Canada is a little extra there, but so the markets that you're addressing really is. It's not just restaurants, so it's services. It could be anywhere where you have. I guess personal services, like, talking about haircuts, everything, where people get, they get paid, and they also get tips, right? So your platform, this Today program, essentially, it's an app that they're able to get their money, the tips, whether it's pooled and everything else, that same day.
Yeah, that's right. And so in Canada, gratuities are treated in a slightly different way than they are in the US. And so in the US, we know that gratuities in most states are taxed, which is why we're entering that market through payroll. And I think it was asked on the last broadcast, what makes XTM different? Why do we think we can compete in the US market? And the answer to that is again, that we are bespoke to the into the hospitality space and services space. This is a very special sector, and they talk a different language. And
the restaurant side, in other words, it's like basically you can own that niche. It's not like Square or whatever. It's a different whole different thing. So
that's exactly right. And the ecosystem in that environment is so important for the margins of those restaurants. It's kind of a, coming back after what everyone's been through for the past couple of years is almost a reset. The whole industry almost needs a reset. Margins were already thin, and now there's increased pressure to be even more efficient. And so, we don't charge the restaurant at all for our service. We are near free to the end user. We only pass on a couple of costs. So there's little friction. There's little reason for a restaurant not to treat XTM solution as a must-have, as an essential, just like they would a point of sale.
Okay, so it's really interesting that you just said it is a must-have. I think it's going to become more and more apparent, especially today. Where you have these, staffing shortages, recruiting issues, a lot of issues, and and you're giving these restaurants anybody who's using your system, a real competitive advantage in terms of recruiting and retention, because, right now, if somebody wants to, be a waiter at a restaurant, they have they can go anywhere, right? So, and if they can go to a place that says, hey, get paid the same day with your tips and everything, pool, and we can talk about the pool, it gives them an edge. And one thing, Marilyn, you mentioned last time, which I thought was very interesting, is that this industry is very there's a lot of turnover, right, in the restaurant and the service industry. There's a lot of turnover. But what happens is when these people go to a new location, which may not have the Today program, the XTM program, they're essentially becoming your ambassador. So they're going to tell them, hey, why don't you have this or whatever? This is so you have this real opportunity for massive viral growth, because it's this word of mouth. Just you have free. Essentially, these are free salespeople working for you. The more success you have, the more success you're going to have. It's really going to get amplified.
Yeah, churn can be our friend for sure, and there is a high turnover in this business. Our stats have demonstrated that. But just like you said, Jack, when you've got an employee that's moving over to possibly another restaurant because they move around a lot, they find that they'll ask their employer, are you on the Today program? If you're not, well, you should be. And if they are, they don't need a new mobile wallet. They don't need a new card. They don't need it. All they need to do is get paid by their next employer. So we can have one person can be paid by a number of different employers. So that's one thing we've worked into the foundation of our solution. But again, yes, they become ambassadors. It becomes a viral program. We have a very low cost of acquisition for our customer base. For those two reasons. The second reason is because when we sign a restaurant, it's typically mandated to all employees that they have to convert to our program. Wouldn't make a lot of sense to vary it. It would probably create operational friction. So we sign one client and we get 10,000 users, and that's how we've been able to grow so quickly.
Okay, so everybody who's watching this program, what they really want to know is, what's going to be the path for this thing to be a $5 stock? Can this get to a $500, $800 billion market cap? We've had success in the fintech sector before. One of our big winners last year was Peak Fintech. That was a PKK, a stock that went from 70 cents post split to $14. It was a 20 bagger. So I think people are wondering, is lightning going to strike twice? I think we have a good shot over here. So let's go into some numbers, like what's going to make this a 10 bagger. So first, let's talk about how should the stock be valued, because I think one of the reasons the stock might be kind of undervalued where it is, and why there's an opportunity is, I think investors, because right now you don't have institutional following so much, right? It's mostly retail investors, right? And they may not really understand, like, how do you value this business? Is it based on the gross dollar value that's processed? Is it based on the number of employees, people on the platform, where you have that network effect? So there's a number of ways to value. And look, we've seen fintech companies or neobanking companies valued at multi-billion-dollar valuations, even at the stage where you're at right now in the VC world, right? We're seeing crazy valuations.
Yeah.
So what should investors focus on, where they're going to get a sense of how fast the company is scaling and how big the opportunity is going to be?
That's a great question. And I think there's a couple of data points today that you should look at. And then as we grow, and we'll grow organically, and we'll also grow through M&A, those data points will broaden. But what's really important, and you don't have to be a rocket scientist to figure out that once you get a client base, then you can further monetize that client base. And I don't mean exploit. I mean, add more value. We talked a little bit about this last week. So adding more value could include things like, if you have a half a million person user base, and you add a feature, call it microcredit, for a couple of bucks a month, which is high value to the end user. It's getting them out of the trap of payday loans. It's offering them microcredit to get to be able to manage their $400 emergency type of event that might happen in their lives. So for $2 a month, then all of a sudden you're adding $1 million a month in revenue to your earnings. So That's one very important thing. The other thing is GDV. And GDV is the gross dollar value load, to the amount of money we move across our system. As we increase the point of sale spend and encourage and incentivize people to spend more at point of sale, our revenue increases. And we've seen it happen. We know when people first come on our platform.
Sorry, Marilyn, the mic, someone went mute again. I think on your system. Okay.
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 So I'm not sure what you missed, but yeah. So what what happens is you've got people that are looking for fuller advantages, and so using it at a point of sale when they first come on. What they might do is not trust the system, and they want to take everything off of their wallet and put it in their traditional bank. But as time goes on, they trust it more. They begin to use the wallet. Our revenue increases through point of sale. So we've seen that. We know exactly how it's going to react, how it's going to be measured. And so that's the other important thing, is the gross dollar value load. And we see that climbing exponentially every month.
Okay. So, and of course, so the value of the company really, I think, is going to be based on this gross dollar value that goes through your system. Okay, so it's interesting. So you mentioned, the wallets, and, I guess we're talking about, how sticky is this? Like, how sticky is it, is the Today program with the restaurants and also with the actual employees? Like, what's the percentage that are still with you?
So right, so we have no churn at all with the restaurants. As we mentioned, 99.7% of the restaurants that we signed are still on, and the only attrition is because of not being a going concern.
But you had 99. It's like, I think the number was 99.3.
Yeah.
They're still okay. So that's
right. Yeah, exactly. So the way I equate it, it's kind of like your accountant. If you use an accountant, the only reason you're going to switch accounting firms or consultants is because there's something gone very wrong. It's just such a hassle to unwind all of that.
Yeah, it's like any type of financial, like a bank account or brokerage account, payroll. People, once you're there, something really has to go bad for you to want to switch.
Right. So we do everything that we can to be, to be perfectly right. I'm not saying that there's not blips along the way, but we fix them quickly. And I think there's a growing confidence in our platform, a growing confidence in us as a company. And we expect very little churn.
Okay. Let's get into a couple of audience questions first. Okay, interesting question. Okay, how is this different than getting a direct deposit? So, how is the Today program that you have? How is it different than getting a direct deposit to their bank account?
So in Canada, the way it's different is we treat it almost like an independent account. We don't anchor your account with the SIN number, with a social insurance number, a social security number. So it is kind of an independent account. And sometimes people don't want to commingle their gratuities with their earnings. In the US, the way we're handling it is it becomes a free mobile account. It could technically replace your current bank account. It does everything that you could do from a bank account, and it's free. So it's not that different, but we intend to add a lot of value for no cost at all to the end user, and also there's many people that are new to probably different parts of the United States. Maybe they don't have a bank account, so this provides them with their first bank account, that can completely emulate a traditional bank account.
So this is actually okay. So this is actually very, it's interesting. I for some reason I didn't think of this before, but essentially, you could replace in many cases banks. I mean, you're essentially a neobank. We've used that word before, right? So technically, I mean, essentially, XTM becomes a neobank where somebody because it's funny because once they're using the service, right? So all their income is going into this wallet, this electronic, which is your wallet. Yep. So then why would they need a bank account, really, because they could do everything through your wallet, right?
That's right. And so when you think about the success of many of the neobanks out there,
Yeah.
like Sean, for example, and Dave and those guys, they've had huge success in acquiring end users because people want alternatives. If you think about the days when, we talked about that, about buying records and how everything's in the cloud these days. So banking is as well. And so what we're doing is we're just taking a different path. We're going at that path through the services space. And these are people with special requirements. Again, we want to make sure that we provide same-day earnings for them so that they have that feeling of financial inclusion, that they can track their transactions on a minute-by-minute basis and manage their money and really take them to a place where they've got a tracking history, a credit history, and they can, buy a house or get a loan if they want one. So these are all the things we're working at with this demographic.
Okay, so it's pretty interesting, and because you're dealing with these kind of mostly larger, I don't know what the word is, larger operators, basically. It's not so much mom and pops, but larger restaurant and service operators. You're bringing massive numbers of users onto your system. So it's not like you have to, acquire new customers one by one, like, Dave or some of these other, neobanks, fintech, etc. So I think, essentially one of the things here is going to be as kind of your base grows, Xtm is going to become extremely, extremely valuable, potentially for a traditional bank to acquire at some point, for a larger amount, like, in the $1 billion range.
Yeah, that's quite possible. There's a number of different sectors that we could add, tremendous value to, and you asked, why would we be a $5 stock? We've really focused on fundamentals. So we've got a very, very strong base, strong team, strong accounting fundamentals, really good business intelligence. All of that is in place. We are poised for growth. We're poised to scale and scale exponentially. And it's been, 2 years head down, really working hard to get this broad base. And now we feel we're ready.
Okay, so real quick, so how many number of shares out fully diluted now?
It's 165 million.
Okay, so the market, market cap is 60 million right now. It's
right.
Very little. I mean, it's less than a private market value. Like either there's private private companies being funded by VCs at $1 billion valuations that have and okay, so just to get for anybody that's new, where are you now in terms of let's go through a couple things. So the gross dollar value that's going into your system, and then your revenues that you're actually reporting, and then we can talk about what's up ahead.
Yeah, so we'll report Q4 on deadline very soon. But what I will talk about is and what we've reported on is our growth, our GDP growth month over month. We're looking at 15-20% month over month growth, and again, that's we still have the volatility.
That's with lockdown still. That's not it. Okay, so 15 to 20% month over month growth, which is a big number because all of a sudden that adds up very quickly, and that's with basically both hands tied behind your back. It's like with this market.
Yeah, okay. That's exactly right. So there's that. Always been open about is the fact that we want to own more of the ecosystem. So through M&A, we will own much more of that ecosystem, from onboarding to payroll to possibly time and attendance and other pieces of that ecosystem. We have our eye on, and we expect to be able to talk about that a little bit more in the very near future.
Okay, so I'm sorry, I forgot. So in terms of the GDV, the dollar, what's the number, right? Like what's the latest number that you have that you could share?
Well, so we won't. We haven't reported on December, but we're moving about close to 25 to 30 million a month in GDV.
Okay, so we're talking about almost 400, 500 million a year and growing. It's a snowball. It like
Right.
it increases, and that's just Canada. We haven't talked about the US yet.
Correct.
Okay, and what percentage of that goes to your kind of like drops to your revenue that becomes you count as revenues?
So you can calculate 1.54% gross
Okay.
is our revenue. So, I've got little messages from my CFO saying no guidance, no.
Okay, yeah.
But you can do the math and you can figure it out. And you can also figure out the fact that most restaurants, if you took the whole year, they're at about, at the very best 50% capacity. It's more like 25%. But again, Canada is seeded. It's ready to go. We are really looking towards the US. The US is where we see the magic.
But the foundation kind of is set because you're going to basically pour over the whole system to the US market. But what's interesting is essentially the number you mentioned. So you're getting like, let's say 1.54, whatever it is. But as you layer in more services, all of a sudden, your revenues can explode. Your revenues can explode 4x, 5x, like that. All you need to do is just add one or two key services, whether it's like you mentioned microcredit. Yeah. So there is some things where which could really instantly, it becomes like a fire hydrant of cash coming in. Okay, so the big question I think is, and we'll try to wrap up. I know you're on a tight schedule today, but so the big thing that people are focusing on, okay, what's the plan for the U.S. market? Where are you now, and when's the U.S. expansion going to go full blast?
So as mentioned, we field testing. Everything's going very well. There's a big call this afternoon with a large group of people. What we hope to be our, among our first onboardings, and we will have something to report to you in very short order about, who we're working with in the U.S. and what the trajectory looks like. We're very confident about it.
Okay, so the U.S. market is basically happening right now as we speak. We're gonna, which is I think one of the big catalyst here. What about? I know we touched briefly on possible M&A opportunities because again, one of the things that you have going is you want to have more services that you can layer in, but at the same time, other ways where you could expand. Strategic acquisitions where you could. Get more users. What's happening there? You have anything that you're looking at right now?
Yeah, so we're looking for companies that are kind of like we're for the peanut butter, they're the honey. If we're the peanut butter, they're the jam. Where we don't compete with each other, but we complement each other. So again, payroll is super important for us, and we're already integrated with a great company, and we intend to go into the U.S. market on all 50 states with this company. We're looking at onboarding. It's that's a complicated piece of our value proposition because of the KYC, the know your customer that we have to do on each onboarding. So these are the kind of acquisitions that we're looking at. Tip pooling is another very important one. We talked about that a little bit last week too, where a lot of restaurants apply a formula to be able to distribute their gratuities throughout their restaurant in a more even fashion. We've added that module to our solution, and we'll charge a small monthly fee for that. But in this business, small fees add up really quickly because of the volume.
Yeah. No, it's incredible. Again, it's very similar to some of the most successful business models. The biggest stock success stories have been those where they were like kind of, I guess, before you had the word neo banking. They were like whether it was Paychex or ADP in the payroll processing, companies that basically add that help move money through the system and get a small piece of it. It really adds up. Let's get to a couple of audience questions here. Andre Philippe asked Marilyn, does XTM plan to have a buy now, pay later service on the Today program? The car could become tip leverage, consumer tool, empowering service.
Andre Philippe, I saw that question last time, and we love that, and that is definitely something that is on our roadmap. Buy now, pay later, for sure. It's along with our whole credit and microcredit vision.
Okay. Okay. I think you touched on this briefly. Lars is asking, U.S. plan for the U.S. I guess the question maybe is like, when can we see the first big announcement? Like within 4 weeks, 3 weeks, one
I would
day?
say sooner. I would say sooner, but we have started. Due diligence is a very rigorous process in the U.S. So we're taking our pipeline. The due diligence has been initiated, and we are going. Q1 for sure. We will see traction in the U.S.
Okay. Let me see. Okay. Pizza. How deeply are you connected with Dine brand or Yum brands?
Yes, we have a number of Yum Brands restaurants on our platform.
And those are just for anybody that doesn't. Is that like pizza? What do they operate? They operate like, I think, Pizza Hut, or no? What do they?
Yes.
Pizza Hut, and a bunch of.
A number of different, very important and lofty brands are part of the Yum brand family for sure. I'd have
Okay.
to, yeah.
Okay, so a lot of people are asking. Okay, multiple questions. Okay, the numbers, the Q4 numbers, those are coming out.
Q4 we're reporting end of April.
End of April. Oh, end of April. Q4 is end of April.
Yes.
Okay.
We report, that's the requirement, is we'll report Q4 end of April.
Okay.
Which is, yeah.
Ralph asking, any news for the 2021 Restaurant Leadership Conference that XTM was invited to?
I don't think it's happened yet, but we do have a speaking spot.
Okay, maybe he's talking about the 22, or was it the Restaurant Leadership?
Oh, any news? I would have to. I honestly, I'm not really familiar with what. Can't even remember when that was. There were so many conferences canceled in 2021. I can't remember what happened and what didn't happen.
Right. Yeah, there was like a CSE. The computer show barely happened. Okay, Simon, great work, Marilyn. Are you still working with NetSense technology, and when can we expect material news, quote unquote?
So NetSense, yes, definitely friendly with NetSense. NetSense is they've reorganized and redirected the way their business is going slightly, but we talk regularly. And when you talk about material news, I would say there's material news for sure in the next quarter.
Okay. Let's see, what else do we have here? Okay, so to wrap up, Marilyn, what other kind of news flow could we expect to see in the coming weeks? What kind of news you have potential M&A, you have US, there's a bunch of things on tap that we have.
We took your advice, Jack, and the advice of our audience too. That we're going to announce new sign-ons every time we sign on a new client in the US and a couple of really big ones in Canada. We're going to announce those. We're going to announce some executive appointments. We're going to announce M&A and of course our earnings.
Okay, so just to add, I think in case anybody does, so basically we talked about. I said, hey, it'd be great if, because one of the things is people, you have so many clients and you have things going on constantly. You're bringing on new clients, onboarding new clients all the time. So I said, hey, Marilyn, it would be great if you just report every time you get a bunch of new ones, you just report it as a news release. So just gives people an idea of how fast you're really starting to scale things, and kind of the cadence. And I think investors would really they'd appreciate. Maybe you can do some case studies. So as we see that, I think it's going to get a lot more eyeballs on the stock.
Yep.
And people are going to really kind of see like under the hood. Hey, wow, this is really, there's a lot going on here. So okay, yeah. I think there was some question. Okay, so I think there was a confusion about the quarterly funds. Q4. What was the question? Okay, when will
the CSE requires us, and the OTC QB requires us to report on Q4 at the end of April, which is exactly what we will do. Yeah.
Okay. So that answers that. Okay. So I think we've covered everything. Marilyn, on that note, I want to thank you, and we look forward to hearing more, positive developments in the coming weeks, new clients onboarding, U.S. M&A activity, all those good things.
Okay, sounds good. Thanks, Jack.
Thank you. Okay, Conrad, hang on a second. Let me get you set up. Can you hear me?
Oh yeah.
Okay, hang on one moment. Let me get. Oh, you know what? You're coming in a little fuzzy. Is it your lens or something, or lighting?
Let's see here.
Maybe let's get that set up before we go live. Or maybe is the light not on in your?
No, it is.
Yeah. Okay, but it's a little bit. I don't know if you can see.
I don't know.
Okay.
Let's see. I'll try to just get the camera here.
Usually, you have a very crisp, clear image there.
Yeah, I don't know.
We need the audience needs to see the full glow.
It's the same setup.
You're wiping. Maybe. Oh, it could be something. Yeah, maybe like there might have been something on the lens.
Yeah, I think it's some. I just think it's like
You got sun.
It's the sun and everything, right? So
you have sun in Vancouver right now.
It's not sun. It's like you can see it's really kind of gloomy, hazy. So it creates that big shock, right?
Okay, here we go.
So
okay.
don't forget, Jack. We got to talk about the $1.5 billion acquisition, US dollars, that happened. A direct comparable of ESE. They're called ESL.
Okay.
So guess what? What I was telling everyone last year.
Well, Conrad, let me get set up here. Let me before we go live. But we got to get into that. Hang on a second. Let me just pull up all the stuff. Get everything set up on the screen here.
I brought the tie and everything because we're talking billions today. Things have changed, my friend.
Okay, things are definitely cooking in the esports metaverse, the whole convergence and everything. We got a lot of people coming into the room here. Okay, so let me just get okay. All right, welcome everybody to Wall Street Reporter's next Super Stock live stream, January 26th, 2022. We are back with ESE Entertainment, ENTEF over-the-counter ESE in Canada. Of course, ESE is has been one of our big winners of class of 2020-21, up 1,700% at the peak. Even now, the stock is still up almost 400% from the time that we introduced it. So it's actually quite good. But most importantly, the revenues have actually outperformed your stock price. Increase of over almost 5,000, 6,000%. We're gonna see the numbers very shortly in terms of the run rate. You're almost at a $50, $60 million run rate. So with that said, Conrad, let's talk about what's ahead here, because right now the stock needs to catch up kind of to the fundamentals. Usually it's backwards. Usually we have companies where the fundamentals need to catch up to the stock price. Here you're basically undervalued by I can't do the math. It's like basically the stock would have to go 5x, 4 or 5x to get to comp value. Now, before we start, you mentioned, okay, there was a direct comp. Speaking of which, what is this company? You said there was an acquisition that happened in the esports space?
Anyone who follows the esports sector, yesterday, a massive announcement, ESL and Faceit get acquired by Savvy Gaming Group for $1.5 billion US dollars. Guess what? Everything that I've been talking about for the past 12 to 18 months just became a reality. When I've been saying we have a target of $1 billion plus market cap, it's real now. 1.5 billion US dollars. It happened yesterday. Read it for yourself. ESL got acquired. So guess what, guys? This is real. This is now. That's the opportunity. There's a new bar set, right? And I didn't set it. The acquisition happened. The new bar, 1.5 billion US dollars. So look at our valuation, look at our market cap, and do your homework. This is an opportunity, and others are setting that bar very high.
Okay, so ESL, very close. I mean, it could have been ESE. I mean, it's just one letter off. Okay, now what? So they were bought for $1.5 billion. And what kind of revenues were they doing? What were they doing? Give us a snapshot so we can see the comp.
I don't know the exact multiple. From what I've heard on the street is that the multiple was in the range of 10 to 15x revenue. Once again,
Exactly what you were saying.
it's exactly what I've been saying from day one. The numbers wrote, these are facts. Now you start looking at our business at a potential anticipated run rate of 50 plus million, and our market cap, something doesn't add up, and it's in our favor.
Okay, so basically, if you're doing 50 million run rate right now, and okay, so one of the things that's been, I think, holding the stock back is that you've done so many of these big acquisitions recently. They haven't shown up on your financials yet. They're going to be showing up over the next few quarters. So it's really going to be probably in the second quarter when Game Addict shows up, all the big ones, and they'll probably still be lagging behind what other deals you're going to be doing. But essentially, you're at 50 million. So the stock should be worth 500 million valuation right now.
And not only lagging behind. How about organic growth? How about the growth internally, right? So acquisitions alone, and then we're also catching up with our synergistic strategy.
Okay, so we're gonna talk about the organic because that's a big thing. Because I mean, you're not just doing a roll up and it's actually the roll ups have synergies. We're starting to see some big numbers come out. We're starting to see you're expanding into other areas with these organic synergies. Like we're going to talk about the metaverse, all that stuff, but. So it's essentially just for the stock to be trading at fair market value. You have how many shares out now? You have 100 million?
Around 62 million. Yeah.
62 million. That's it?
Yeah.
Oh, no. So it's a 60. Okay. So I thought it was more. No. So 62 million fully diluted.
Yeah. I'm saying roughly.
Okay, so it could be 60, whatever the number, but it's so basically the market cap is under 100 million. Let's call it 75 million Canadian. It's not even US, and it could be worth essentially, 500 million. So that's an 8 times. Basically, the stock should be $10 right now.
Like I said, I can't give you the guidance, but the comps are out. It happened yesterday. ESL got acquired, 1.5 billion US dollars, not Canadian, US dollars.
That's US dollars, real money.
That's creeping towards 2 billion Canadian.
Okay. So, it is so, I just find it so amazing that, last year, when you debuted this, on the program, the stock, of course, the market was a little hotter. We'll say that, but, the stock got a little bit ahead of itself. Went to, from 30 cents to like $4 in 4 months. Which is pretty fast. Now that you've actually delivered everything that you've said, which we never see happen, almost never see happen in the microcap space, the stock now actually needs to catch up. So basically, we should be trading at roughly $10 right now, just based on where the business is. And of course, one of the things you've been saying is, hey, the goal is to get this to. First you were saying it's 100 million, but you're getting close to the 100, and then you've been saying 250, 200, 250 million dollar run rate is the new goal. So we're talking about essentially this is going to be the path is there for ESE to be at least $1.5 billion valuation, like your twin ESL, ESE, ESL. It's very same,
and it opens up a new. Basically gateway into new acquisition targets because this is public news. You see Microsoft buy Activision Blizzard, right, for 68-70 billion US dollars. ESL gets acquired 1.5 billion. So what happens is now new groups are understanding that we need to consolidate, we need to consider acquisition, we need to really consider this, right? So the whole paradigm shift with our huge pipeline of over 100 million plus They're calling me now a little bit more aggressively than they were 6 months ago. I'll tell you that much. So it's really exciting to see people are more active and engaging in these conversations. And we're primed for it because we have positioned ourselves through fundamentals, through delivering, through executing to be in a position to acquire more groups, to consolidate more, and to potentially even be in a position to either get acquired or join a bigger group.
Okay, so it's really, look, I think it's really inevitable. I mean, it's, and the reason I say this is inevitable is, the track record is there now. It's like, it's not anymore. It's not like a promises story. We've seen in the microcap space, so many companies have promises, year after year for sometimes, they run on these fumes for, a decade or more. Whereas here, you started basically at zero or million revenues. All of a sudden, you basically delivered. And I don't think investors understand just how significant that is. So that it means that it really is going to be inevitable. Essentially, ESE is going to get to that $1.5 billion valuation at some point. I don't know if it's next week, next Wednesday at 3 p.m. or it could be May 12th at 5 p.m. But the path is there. The path is there. So we got some.
And generally speaking, groups and companies are rewarded for the speed that they could get there. Look how fast we executed. 4 completed acquisitions in a calendar year with a 5th coming up in the next 30 days. I mean, it's unprecedented. The acceleration and the speed that we got there needs to be rewarded. We're not stopping. And that perpetuates into this consolidation kind of theme that's happening right now, right? So the faster we grow, the more market share, and we're going to continue to accelerate. And if you don't think I'm excited, I mean, like I said, I'm going to say it for the 10th time on the show, 1.5 billion US dollars got completed. So the motivation is definitely there. Let's put it that way.
Okay. No, so this is no. I think it's a fait accompli that ESE is going to get to that $1.5 billion market cap again, whether it's this month or a few months. But one thing that I think at some point, once they see a few more of these acquisitions, and it's funny, we've talked off the air before. I said, hey, this is going to be the deal where all of a sudden everybody's going to wake up, when they see this big one. But I think at some point, once you keep hammering away, at some point that rock is going to crack. People say, wow, these guys are really moving fast. They're delivering. And that is worth a lot of money in the tech market once things get back to normal. So Samantha, we get a couple of interesting questions and comments coming in right now. So she's saying, okay, so esports organizations merged from ESL Face Group. $1 billion is $1 billion, 1.5. I don't know what
no, it's 1.5 total. So
okay, ESL
roughly 1.05 for ESL and an additional 500, but it was a package deal. From my understanding, that's the news that I received. The total package is 1.5 billion US dollars. So
I never even heard of these companies. So this just goes to show how much money is out there in the space.
Yeah, it's unbelievable, and I absolutely love it. You know why? Because I've been a broken record since day one, telling you guys this, and now it's real. So now you can go read it for yourself. It's public knowledge. And now hopefully people will start taking what I say is a little bit more seriously because it's happening right now. And I've been saying it for the past 12 to 18 months.
Okay, we're going to talk about some of the news, the metaverse stuff in just a minute. I just want to get to some of the audience questions first. Nicholas asking, in the wake of all these recent esports acquisitions, my question is, have you gotten calls? Have the offers been significantly larger than the current market cap? So notice, we're seeing transactions happen. Are you getting calls now, maybe from, ESL now, or maybe even, Microsoft? Microsoft actually is a player in the, video game space. They want to get it. The infrastructure thing is something that they value because, they're in the cloud business. So for them, it would be a natural.
Yeah, obviously I can't give guidance on internal conversations. What I can say is do your research. This is public knowledge now. Microsoft just did one for 68 to 70 billion, 1.5 yesterday. Do you see a theme here, guys? I mean, these are multi-billion-dollar transactions happening regularly now to start the year. And we anticipate that to continue. We anticipate to see other groups kind of get caught up in this consolidation theme. And hopefully we're a part of those conversations. And we're positioning ourselves to be in a position. And I think we've done that. We've proven it. I mean, look at the consistency of news that we put out, the quality of news. I'm telling a story by releasing news almost every week, and it's quality stuff. We already had 2 news releases this week. I mean, guys, it's follow the story and be patient. There's more coming.
So I think, we're going to see esports become one of the big market themes. I know we said it before, esports, although things have been kind of hot, but it's still very early stages. We haven't seen, like, for example, I was going to say like esports would become almost like the sports betting space. Last year, sports betting was a hot theme. Of course, interestingly enough, very similar to what's going on here is a lot of the sports betting stocks ran up like crazy last year in advance of legalization in the US and a lot of new markets. And now that it's actually here and they're starting to generate crazy revenues, all the stocks are back down to where they were before everything. So it's just goes to show that the market is this actually creates an opportunity, because now is the time when you actually have it.
This is the opportunity when things are now real and there's real comps, right? So now you could say, wow, this is pegged at this price, and where other groups are headed, right?
Yeah, but I think esports though is still has not become a dominant theme yet. I think it's gonna happen.
It's accelerating.
It's gonna happen because it's such a massive market. I think we're just waiting to see. There's gonna be, once there's a massive leader in the market, one of these stocks starts falling. All of a sudden, everything is gonna start moving. And I think like I think the FaZe Clan deal is supposed to. When is it? When is it going to start trading? That SPAC, the merger. When is that happening?
I mean, I don't know the details, but once again, I think they were in the ballpark of $1 billion.
$1 billion, yeah.
Once again, do you see the theme here, right?
It's 10x. Basically, 10x revenue seems to be like a typical multiple.
And it's what you said. It's accelerating, right? You bundled in the FaZe Clan. Now you got 3 deals over $1 billion in the next 6 months, and you're just. Yeah. Things are accelerating, the market's consolidating. When you have bigger groups consolidating, guess what happens? It gets even bigger because they're pushing it with more capital, more bandwidth, and you just go from 0 to 100 now. So don't think that ESL is going to get smaller. They're going to get bigger. Now they have more infrastructure, more capital, more growth opportunity. So this is the exciting part, right? The industry is flying.
Yeah, no, I think this is going to be a massive event at some point where everything is going to just like, people are just going to catch up. As especially like in the US market, I think in the US market, people don't quite realize how big esports is. Like they're vaguely aware. I mean, they know video games. I mean, I guess they know a little bit, but I think all of a sudden the metaverse might be going to start. Maybe that's going to be the trigger. And we'll talk about what you're doing there. But there's this whole Web 3.0, and it really esports is kind of native. It's part of it is a native thing to the metaverse.
Yeah, it shines a light on it. That's what it does. It puts a microscope on the fact that this is how big it is, right?
So JKO saying, don't get acquired for no less than $50 a share. Like SEA, or it was SEA, the Singapore company. I mean, they massive winning stock, and their business was primarily built on top of esports. We've seen what's the other one? Tencent. I mean, there's a lot of the Asian hot stocks.
Massive.
Yeah. Question here. Okay, so Jonathan is saying, so how come the other guys were bought for $1.5 billion, not you?
Great question. There's always a first to market leader. You have to give ESL credit. They were basically first to market. We actually work with ESL quite a bit. And we have some former employees from ESL that work for us now. So there's a lot of, similarities between the group, let's say. But, I think they're first to market. They got rewarded for it. And and they set a new standard for us, which I think is fantastic. And it should give shareholders even more confidence where this is headed, the direction it's headed. So I'm actually very happy that this happened. I'm happy ESL got rewarded for the hard work they put in, because it puts us in a position to execute now. And now, like I said, I don't have to tell you. It's out there for you guys to read. So now you got two people that are going to tell you. I'm going to continue to tell you, but now it's real. So it's fantastic.
Basically, at this point, with just the fundamentals in place, we're just waiting for there's going to be just that one event, which is, it's almost like, you ever see little kids when they hit that piñata, the piñata.
Yeah.
So you don't know which strike is actually going to crack it open and all the goodies will fall out. But so it could be but it's inevitable that something is going to happen where the piñata breaks and all the gold falls out and this becomes a $10 stock and goes.
And to the user's point, to his question, believe me, there's room for more than one. I could guarantee you that.
Huge market.
It's a massive market.
Okay, so so Conrad, let's get into actually the focus of today's little chat here is really, we're going to be talking about the metaverse and also the organic growth, because we've been always talking about the acquisitions, but you actually have what is it, 4 or 5 operating businesses. They all have synergies, all have growth initiatives happening.
Yeah.
And now, so I think we've got to actually start announcing more of those people. So just to keep people updated, because there's so much stuff in the backlog that hasn't even been announced probably. Now you mentioned the metaverse. Okay, so you just basically, what's happening? You announced a partnership with Skin Wallet. So just explain to people, what is it? What do they do? What is ESE doing in the metaverse? Maybe you could say, what is the metaverse? Let's get into all the details of that.
Yeah, I think that word's been thrown around a lot, and people are jumping at it to get involved, because it's such a massive opportunity along with Web 3.0. The way we wanted to position ourselves, first, we built out our metaverse business unit internally. So our most capable people internally that have the most in-depth knowledge of what's currently happening in the metaverse and where it's going. So we created an internal metaverse business unit that I'm leading the charge on. And we wanted to enter this space the right way. So just like we provide services, real value add services to gaming publishers in the esports and gaming sector, we wanted to do the same in the metaverse, because we started to see the cross section and all the game publishers going into the metaverse for that big blue sky opportunity.
It's really native. It's all kind of cut in. Yeah.
Cross section. So first we started the business unit, and then boom, news release goes out yesterday, our deal with Skin Wallet. We're already generating real revenue and profit in the metaverse.
Now, as we speak.
Now.
Okay. How, what are you doing?
So similarly to the gaming space, we could apply similar services that we already provide to those publishers, but now in the metaverse, whether it's on NFTs, whether it's based on advertising and sponsorship within the metaverse framework, in-game type of skins, NFTs, and that's where obviously Skin Wallet comes into play, because they specialize in NFTs and skins, but we're adding the twist of marketing, sponsorship, advertising. So we're monetizing now inside that metaverse.
Okay. And I think so basically Skin Wallet, I think they run a marketplace for trading like in-game assets, right? That's
exactly. Skins, NFTs, they do, the whole gamut on that side of it.
Okay. And also, like, what about, like, I think what are those games? Is it like, I don't know, the weapons or powers? They do that stuff also?
So traditionally those are called skins.
Oh, that's what it is, skins. Yeah. Okay.
And now with kind of the onset of NFTs, I think obviously we're going to start shifting more into, NFTs versus skins.
Okay, very, very interesting. So again, it's people are talking about the metaverse and everything, but really, so essentially ESE, it's like it is, basically,
it's our backyard.
part of the metaverse all along, because with what you're doing in esports, all that stuff, kind of ties in. You buy the skins, and also you're in the metaverse, so you trade the thing. You say it's some crazy stuff happening.
And you see the CEO of Epic Games, I mentioned it last time. He's been very public about saying he believes this is a multi-trillion-dollar opportunity, the metaverse. And there's some very exciting news that came out as well today. Epic Games is going to be doing a lot of their game development now in Poland, which is where we're headquartered. So really looking forward to reconnecting with that publisher and looking at some new opportunities.
Okay. So what about you mentioned you're doing something in Sandbox and Decentraland, right? Which are what's going on there?
A lot of things. I can't get into too much detail, but we'll be having some news releases coming out in the near future, and I got a really cool surprise for your viewers coming up in the future too with Decentraland.
Okay. So those are very hot areas inside of Web 3.0. Let's get into some audience questions. Samantha saying, Conrad, great work. Can you quickly go over Skin Wallet deal and how this helps expand your reach and revenue opportunities? And can we hear any updates regarding Formula One and upcoming events which Frenzy will be broadcasting? Any news at NASCAR? Thanks as always. CEO of the year. Yeah, Conrad, we got to send you the award. We got to get that.
I'm waiting for it, because when I get it, I'm gonna put it up on the screen and show all the viewers.
We're getting it fabricated. We got
trust me, Jack's on it. I'm holding it to him, so he said it's on its way.
So just maybe you start talking about, maybe you can expand on it, like in terms of what, how big the revenue opportunities there could be, and also what is Formula One? What's happening with that?
So this is the beautiful part about the metaverse space. The scale and opportunity for revenues and profits there is no limit, right? So
because no cost of goods.
Yeah, it's unprecedented. So we've started on a real project that we released with our news. We'll be releasing more information via additional news releases. But as we continue to build with these groups that are legitimately active in the metaverse, so real groups that are generating real revenues and profits in the metaverse, that opportunity just can continue to accelerate. Another question I saw she asked was about Frenzy. We've been very active, as you can see, 20 new countries for Valorant exclusively with Riot Games.
Just for anybody that we might have new people, what is Frenzy doing, and what's
so that's our production arm. So when I mean production, they roll out esports tournaments and leagues and do all the broadcasting production side of things for Riot Games when they're rolling out new games into new regions. We announced recently this year that we're rolling out into 20 new countries with Valorant, into several new countries with League of Legends. Keep in mind, those are the two biggest combined games in the world. So that's the level we're at. Those are the type of rollouts we're doing. And when we talk about organic growth, for Valorant last year, we had one country exclusively. Now we have 20. We went 20x for growth as it pertains to our production. Okay? So if you want to talk
about organic, that's organic, by the way.
That's organic. That's organic.
And it's a lot of organic stuff. It's not just.
And it's a multi-year deal. Multi-year deal. So read the news release, guys. I'm telling you, I'm putting it out there for you guys to read. I can't read it for you. Read the news.
Speaking of news, what is it? You had an announcement about Ultra Liga. What is that? What's happening there?
Yeah, so that was for the League of Legends, and that was once again further expansion. 3 more countries on top of Poland, right? So there's a theme here, guys. The growth is happening, and it's happening fast. We're not just re-signing deals. We're accelerating 20 times, 3 times, 5 times, real growth, and it's organic. new multi-year contracts. That's why you guys have to really look at these news releases and read them. It's really important.
Nicholas is asking, in the past you've mentioned the run rates of DM, that's Digital Motorsports, and Frenzy.
Yeah.
Can you talk specifically on the growth since they were acquired? When are you gonna, like, I guess he's asking, like, are you gonna like break out the organic growth at some point?
Yeah.
How are you gonna report that?
Yeah, so our quarter is due at the end of February. So the numbers are gonna come out for the annuals. As you mentioned, a lot of revenue doesn't get picked up in that last quarter. Most of it's going to get picked up in this quarter and the following quarter because Game Addict will come on. So like you said, the next 2 quarters, you're going to start seeing that. And then we could break it out for you and our shareholders, and they could see the organic growth. And I think you guys will all be pleasantly surprised of, how fast everyone's growing internally, because we've created this ecosystem, this 360 solution, and now we're starting to work together. We're implementing all our resources and we're scaling. So things are happening fast.
Okay. When is Game Addict? When is the Game Addict team coming on the program? Because that's a new acquisition. It's 25 million revenues.
Yeah. So coming up, as I mentioned on the last time I was on the show, next I said 10 to 14 days roughly. So now we've kind of shrunk that down. It's going to be the next kind of 7 to 10 days. And then we'll come on the show. And I think you guys are going to be very impressed with Eric, the CEO of Game Addict. And we got some amazing things cooking with those guys. So they're just going to bring a new influx of news, a lot of energy to the group, and a lot of value add to the group, quite frankly.
Now, I think we have a couple of questions. People are asking about iGaming, which is, of course, online, betting.
Yeah.
And I think Game Addict touches that space a little bit right now. Getting customer acquisition type stuff. Are you planning to do more in that space? And especially now, with the Metaverse thing is, everything is kind of converging.
It's once again, I talked about this 12, 18 months ago. This is how this industry is. It's all going to start converging. The crossover is real, and it's happening now. iGaming is a space that we're very interested in, but we're going to do it strategically, and we're going to make money doing it, and we're going to be profitable doing it. Just like we created a Metaverse business unit, and we actually delivered and got a contract in almost immediately. We want to do the same thing for iGaming. So when we are ready as a group, we're going to do it the right way. We're going to create a structure within ESE to really attack it properly and make money. At the end of the day, that's the whole reason we're here: generate revenue and generate profits.
Okay. On that note, let's wrap up here. What other kind of news can we expect in the next 30 days?
A lot of news. That's the most important thing. I mean, look at the consistency. The consistency will not stop. The news is backlogged. Our whole year is basically booked for the whole year. So I'm going to continue to tell the story through news releases. I'm going to continue to get on the screen, whether the market's up or down, or it doesn't matter. I'm going to continue to tell this story because the value is real, and it's been proven to be real by these recent massive acquisition, multi-billion-dollar deals. And we're not going anywhere. We're just going to continue to scale. So as shareholders, do your research, and this is something that you want to follow very closely.
Yeah. So kind of, we got to get you the CEO of the Year award. It's interesting because one thing you mentioned that you're gonna, you've been appearing on the program where the market's up or down, and of course, this week it's been a very volatile, last 7-10 days. And when we spoke last week, and I said, and look, we've had people like say, oh well, we're gonna make sure we hold off, this, that, maybe. No, it's like, just and you show up. So this is very important. The consistency that we see.
I'll tell you this: when you have a great business and it's growing fast, you don't need to not be on the show. You don't need to hide. We're front and center. We're hitting this head on. Like you said, consistency, day in and day out, brick by brick. We're building this thing, and I know exactly where I'm going. My employees know exactly where they're going, and I hope shareholders kind of wake up and realize where we're going with this.
Conrad, I haven't asked you this question in a while, but like, one of our favorite questions has always been like, in your opinion, like based on everything that is going on right now, what would you say, again, in your opinion, top 3 reasons why, investors should consider ESE based on where you are, January 26th? I don't think I've asked you that question in maybe 6-9 months. So we got to get an update on the answer.
Well, I don't need to change my answers. And even better than that, now it's proven this is a multi-billion-dollar industry, proven by facts and acquisitions. That's the upside. This is a generational opportunity. You see Microsoft buy Activision Blizzard for the biggest acquisition in history. Okay, that's a generational opportunity. And 3, ground floor opportunity. Look at our market cap. Look how tight the share structure is. Those are your 3 points. Those are your 3 takeaways. Go do your research and realize the opportunity here.
Okay. On that note, Conrad, I want to thank you, and we look forward to catching up with you very soon. Hopefully, we'll get the Game Addict people on,
and the trophy,
and then we get the trophy.
Yeah.
The trophy over.
It better be here for next time I'm on. It better be here. I want the trophy sitting right here on my shoulder.
Okay. Conrad, thank you, and thank you everybody for joining our live stream today. We will see you all on the next one.
Awesome, guys. See you soon.